Hello, I'm Darius McDermott, Managing Director of Chelsea Financial Services. Today I'm with Luke Bars, who's the Investment Product Specialist on the Goldman Sachs India Equity Portfolio, which sits on the Chelsea Selection buy list. Luke, India is such a fascinating country, and the fund has just gone through its 10th year. How has investing in India changed in that decade?
Darius, thank you for having me first and foremost. Look, India's changed hugely. We have a backdrop now where we're seeing pretty meaningful reform. At the macroeconomic level, we've seen changes in subsidization policy. We've seen goods and services tax reform, which is a huge benefit to the Indian economy, not least of which because it improves the fiscal position for the Indian government, but also because it simplifies things for a lot of Indian companies. Right? The challenges you've had historically around managing some of the tax complexity is being alleviated, and that's really feeding through into the bottom line. And so we're seeing that come through in earnings in a very different way to what we saw maybe 10 years ago. And I would just say at the very headline level, and it's maybe not 10 years ago, but if we think back into the 2013, 2014 period, especially under the past Congress government, you saw huge problems around growth in India. So most simplistically for us, what we're seeing in terms of changing dynamics is a shift where India was maybe 5 or 6 years ago growing at 3.5%, 4%, which felt like a recession. Yeah. We're now in an environment where India's back at growing 7.5% to 8%. You're seeing consumption pick up, and I think crucially at this point in the cycle, really the thing that's been missing for the last 3 or 4 years has been the private capex side of things. And that's starting to come back. We're starting to really see that drive operating leverage for companies, and that puts us in a far better place as we look forwards into 2019, 2020, around seeing continuation of the earnings recovery we've seen over the last couple of years.
And obviously Modi is approaching the end of his sort of first term. Tell us a little bit about Modicare, what that sort of means for the Indian population.
I think it's an incredibly ambitious project. It is effectively trying to provide some kind of health care, some kind of health support for the average Indian. So in the most simplistic sense, what you're saying is that the government will fund the insurance premium up to roughly $6,000 in effect for someone to go and actually receive healthcare. And I think the reason that's so relevant in India is you have, whilst an aggregate improvement in wealth over the last 10, 20 years, you still have quite a big part of your population which is very much tied to agricultural economy, very much tied to just that subsistence farming economy. And so what happens is when you do get health issues, almost all of your discretionary income is going and solving those health issues. And so this can hopefully alleviate some of that burden onto those individuals, which should be net beneficial for consumption, especially at the lower end in terms of just starting to see a little bit more of that discretionary income being spent on basic products to improve standard of living, especially in the agricultural space.
Over the last 6 months particularly, we've had strong US dollar. There's quite a high correlation between strong dollar, poor emerging market performance.
Yeah.
Is that the case with India specifically, or are there any differences with India versus a broad emerging market?
It's been a similar issue for India this year. We've seen, partly because of oil prices rallying and the fact that you've also had an environment where dollar has strengthened, you've seen problems at the headline level for India where current account has moved a little bit more than we would have hoped to have seen, but actually it's still in a fairly robust and healthy place. And so the problem has been much more the translation effect of us being invested in local currency and repatriating that into, say, US dollars or other developed market currencies that's been the headwind. From an underlying fundamental picture, actually stronger dollar is only at the margin hurting what we see. It's been a net beneficiary for some of the larger cap stocks. If you think of the healthcare space, if you think of the IT services space, where US dollar revenues are the core part of their business, and so actually they've benefited. At the more domestic space, where we see a lot of opportunity in the small and mid-cap type of companies, it is a little bit more of a headwind because inflation has started to pick up with that INR weakness. But actually what we see is the government really starting to focus in on trying to just stabilize the currency, and actually the domestic environment hasn't worsened maybe to the degree where the market has reacted. And so as we look into next year, we still see pretty healthy earnings backdrop, 15 to 20%, even with a slightly weaker currency, which would historically have been much more negative for your domestic businesses.
Thank you, Luke. For more information on the Goldman Sachs Equity India Portfolio, please visit chelseafs.co.uk.